If you're a potential plaintiff in one of these cases...
Attention veterans who used combat arms earplugs.
Attention cancer victims who used the weed killer Roundup.
Attention women.
Attention landscapers and anyone working in the landscape industry.
It's likely law firm marketers have found a way to reach you.
Each year we see more and more advertising chasing more and more claims.
And they all say at the bottom, if you've taken this drug or if you used Roundup, contact these lawyers.
You and your family may be entitled to substantial compensation.
Compensation.
Significant compensation.
So the mass tort industry has grown quite a lot in recent years. There's the talcum powder litigation, there's Camp Lejeune.
For the lawyers working these cases, the paydays can be huge. Typically somewhere between 20 and 40% of any settlements, awards, or judgments. But there's a catch.
A lot of these plaintiffs' firms, they work on contingency. They don't get paid until the case is settled or goes to trial.
Rustin Silverstein is the founder of Ex Ante, a firm that provides data and analysis on mass tort litigation advertising. He says trials or settlements on mass tort cases can take years. High rewards, big risk. It's a perfect combination to attract a new kind of outside investor, the litigation funder. And the money has been pouring in. It wasn't always this way.
I like to tell my students that when I went to law school, the term mass tort didn't even exist, right? Because these cases had not yet emerged.
Linda Mullenix teaches mass tort litigation at the University of Texas. If you took a class on the subject in law school, you probably used her casebook. A tort, of course, is a civil wrong, an act that injures or causes harm to someone, giving them the right to a legal action for compensation, which makes a mass tort
a case that involves injury or harm to large numbers of people. And so the first ones to emerge were asbestos litigation.
This man could tell you a lot about asbestos now.
Bendectin, Agent Orange, all of those began to emerge at the end of the 1970s.
These cases took years to resolve, but the paydays were increasingly worth the wait. Case in point, the master settlement agreement reached in the tobacco litigation of the late 90s.
The states will receive the largest financial recovery in history, a total of $206 billion.
As time went on, more cases produced more billion-dollar settlements, and hefty legal fees along with them. Which brings us to today.
There are a lot of torts that have come up in recent years that have had really large amounts of money tied to them with major corporations.
In the last 10 years, these cases now have all gone into MDLs, multi-district litigation.
That's where similar civil cases from different federal districts are consolidated under a single judge to streamline the proceedings. In practice, it has created a procedural vehicle that typically results in settlement, sometimes without much judicial oversight.
It leads to higher jury verdict amounts, higher settlements, which of course both leads to more revenue, more funds available for the participating law firms to then bring their next cases, as well as it attracts, which we've seen more recently, outside investors.
Outside investors, as in litigation funders, third parties who fund lawsuits in exchange for a share of any settlements, awards, or judgments.
And the reason for it originally was if you're a major company and you're suing an even bigger company, you don't want to take money from your bottom line to pay for litigation.
As Hollywood reminds us, litigation is an expensive and arduous endeavor, tracking down plaintiffs on a broken bus in Amarillo.
Howdy, folks. Can someone tell me if Mrs. Alma Mae Urbano is on board?
Committing 600 phone numbers to memory.
Annabelle Daniels, 714-454-9346.
In the beginning of the era of mass tort, the people on the defense side of the docket, which are usually corporations, basically could prevail in these cases by wars of attrition. They just had more money.
Today, the tools to find claimants are a bit more sophisticated.
These advertisers, they know when they put ads on the air how many phone calls that generates, how much contact to their law firm it generates.
The phenomenon of mass communication through the internet, it does play a big role now,
with increasingly sophisticated social media marketing techniques, who knows, with AI.
So these outside investments are clearly helping plaintiffs' lawyers do their job. But what's in it for the litigation funders themselves?
Traditionally, when litigation funding first started, it was really about funding one case and then getting a portion of the award.
A rather sizable portion. The returns on a few $1 million that a litigation funder puts in a case can be exponential, though only if they win or settle. But in these mass tort cases, the funding is structured more like a loan. Win or lose, the investor gets paid.
It's morphed into something like portfolio funding, which sort of hedges your risk, which is mass torts. So you can invest in an entire law firm with a loan, and you're not just doing one case, you have thousands of cases. So there's a better chance of it not going totally bust at the end.
This came to be seen as a very attractive investment asset class for investment firms, private equity firms, hedge funds, and others. They just provide a great investment return.
How great of a return are we talking?
When it comes to this type of litigation funding, it's based on interest rates. So there's usually around a 20% interest rate.
Naturally, these are all private contracts, so details are murky. But Emily managed to figure out some numbers for Camp Lejeune, one of the largest ongoing mass torts.
Drinking water should not cause cancer.
The federal government, which is a defendant in this case, has projected it may ultimately shell out $21 billion to compensate veterans and their families sickened by contaminated water on the U.S. Marine Corps base. The law firms that represent the victims are looking to pocket some 30 to 40% of that.
If a lawyer takes 30% of $21 billion, there's a way to do this math, but I'm not sure I could do it on camera.
We've got you. The lawyers could take home around $6 to $8 billion out of that settlement. The litigation funders' cut comes out of that slice, not the plaintiff's share.
If you're on the plaintiff side, you see this as a very positive thing, as a way to bring justice and compensation and legal services to people who otherwise wouldn't have it. On the other side, I think there's an argument that it leads to filing of a number of unnecessary cases without merit, without a clear injury.
For the plaintiffs, their lawyers, and their funders, justice is a verdict in their favor. Or
the settlement, a cash settlement.